Hey guys, welcome back to Hedge. Today we're going to be talking about the first uncollateralized crypto mortgage for property and what that can mean for the future of crypto holders. If you like this kind of content, you should definitely watch this video to the end, like, comment, and subscribe. Check out some of our other videos and definitely enjoy what we're going to be talking about. But before we go on with this, I just got to say this is not financial advice. We don't accept liabilities for the losses that you might incur, and everything here is strictly for news and research purposes. So with that in mind, let's move forward. Ethereum DeFi project Teller facilitates first uncollateralized mortgage loan. That's a big deal because up until this point, all we could really do with crypto is buy NFTs, do little micro transactions amongst each other, and stack value. That's what we were able to do. But now we're getting to a point where we could actually potentially see people start buying homes with crypto. This is where we're at. And basically the company is called Teller, and they worked, or rather the lending protocol is called Teller, and the company that did it is called USDC Homes. How it works is that the person basically took out a $500,000 USDC loan or mortgage valued at $680,000. And then with that and a combination of their down payment and credit score, they were able to actually secure the loan for themselves to have this mortgage. Meaning that we're at a point now where banks want money. Everything wants money. Things have to be done. Now they're turning to different avenues. They're turning to digital avenues because that's where we're going to be going. The new wave of property owners are likely to be nouveau rich from crypto, as you would say. And this is an example of once the first one successfully happens, there will be many others that follow. And don't be surprised if you see that this is going to become a norm in the future, especially as the space develops and eventually they won't even necessarily need to do complicated processes to facilitate property ownership anymore. Eventually it'll be as simple as paying your mortgage to a smart contract and having the deed released as an NFT to your wallet. It's going to be that simple in the future. And once we get to that point, there's going to be a lot of fees saved and a lot of money to be made just because of the ease of use to be able to do these things. It's definitely a big sign to see that it was an unsecured loan done with crypto. Usually they make you collateralize like crazy. Now they're like, we're at a point where things are established enough where we could trust it. Let's see how the first house sale goes, mortgage goes, and we'll see if it's worth it to open up the doors to the crypto community. If that happens, there's going to be a lot more value in crypto because now you could treat it similar to the way you would with stocks. You could take your crypto, take a loan against it, and then instead of paying capital gains on your crypto, you'll be taking a loan against it and then being able to do what you want anyway, which is how the rich and institutions do it. They don't tell people that. No rich person is just going to go and sell their stocks to go buy a house. No, they're going to collateralize it, get the value associated to buy the house, and then they grow their net worth without ever actually having to sell any of their net worth. That's how you accumulate wealth. This is going to be something that could potentially be opened up to the public soon if you're smart enough to catch the trend. And that's what this is showing, right? With his credit score, he got that loan. And one of the other things that I wanted to mention is this was all done on Polygon. So it goes to show that Polygon also has room for growth simply because they made it happen. It was done on their network as a layer 2. So they used Ethereum, the protocol on Ethereum, with the Polygon layer 2 solution to make this happen. That's one of the things that's beautiful about it, is because you don't need a bank for that. There's no need for a bank in that. That's basically all just done through crowdfunding with the Ethereum network, basically. I mentioned, like I said, you don't need to incur capital gains because you're putting it up against your crypto. You don't have to actually sell your crypto to make it happen. And then they use the software to actually check your credit score. So it's like you won't need people to do credit check with you. You won't be going to a teller and being like, hey, I need this done. It's like, no, the software is going to decide like if you're even able to based off of math at that point. So there's going to be, I believe, less gatekeeping if this becomes popularized and taken care of properly. For those of you that don't know, gatekeeping is basically the barrier of entry to be able to get property, as well as gatekeeping could also be used as a barrier of entry to get a bank account or to get stocks, because you need a minimum investment to get those things. A lot of people don't talk about that. From my understanding, the on-chain and off-chain data is at a point where they're able to mingle and create an opportunity for you to either receive the loan or not based off of credit history. I think this is an innovative step for mortgage loans, and it's going to reinvent the entire industry and create basically an asset-backed infrastructure for DeFi as we start taking physical world things and putting them basically on the blockchain and creating a system where that's possible. As it stands, this was done in Texas. USDC Homes is planning to move beyond Texas soon and eventually across the US. So for all you Kryptonians who actually care about this stuff, I hope you enjoyed this video. I hope you learned something, and you should definitely like, comment, and subscribe, engage with us, because it really helps our channel grow, and we appreciate your viewership. Take care.